Welcome everybody to A&D Mortgage's weekly webinar. Today we're going to be taking a deep dive into bank statement loans. Very quickly, again, my name's Carl Holman. I'm the manager of communications here at the company. I'll make our introduction of our speaker in just a moment, but we'll just go through the ground rules really quickly. For those of you who have attended, you'll be familiar. For those of you who haven't, just a couple ground rules, which are we've muted cameras and microphones just because we are recording this. We want to make sure that we keep everything pretty streamlined. So we're going to ask folks to raise their hand, or we'll use the Q&A function to put your questions in and we'll answer those after we get through the formal part of the presentation that our speaker is going to make today. The only other thing I would ask is if you could turn your cell phones off just so that you aren't checking emails and you can stay focused on the content and don't miss anything important. With that, I will introduce our speaker, David Chapman. He is one of our wholesale sales managers on the West Coast. He has done bank statements for probably longer than he wants to remember. And he's been in the wholesale mortgage industry for quite a number of, I'll be kind and say years and not decades, but it's closer to decades. It is closer to decades. So with that, I'll turn it over to Mr. Chapman, and he will take you through the bank statements program.
Hello, everybody. Again, I'm David Chapman. I've been doing this way too long. I don't really know my audience. It's hard to talk to you a little bit without knowing my audience. I appreciate that you're here to take a minute to dive into bank statement cash flow analysis and how A&D Mortgage presents it and makes it work. I want to take a second with this slide and just talk about A&D Mortgage for a second. I got into this industry in 1989, and after coming back from Brazil from being a math teacher, and the only relevance to that is that the analytical background that I bring to A&D Mortgage and cash flow analysis of bank statements is an analytical process. It's streamlined through how A&D Mortgage has put together the teams of people to help you do it. Then that's what we're going to talk about today. But the reason I came to A&D Mortgage is an interesting, real quick story, in that I want you to recognize the strength of this company. That's really the most important thing. A&D Mortgage. I interviewed with A&D Mortgage in April 2020, and if anybody that remembers that time. The 2016 was like a rebirth of non-QM lending, and it was starting to build momentum. But then COVID hit. I was the last plane back from Miami to land in LA before they started closing airports. A&D Mortgage was able to pivot on a dime and switch from non-QM, which became unstable, back to conforming lending, because we're agency direct, we're Fannie Freddie direct. So at what that should say to you is that you're dealing with an ownership and a team of people that will be here tomorrow for you and your borrower. Okay, so that was really important to me. And as non-QM started to reopen, we, with the support of Imperial Fund, are extremely well financed. We securitize our own paper. It's our guidelines, and that allows us a lot of flexibility. So one of the things that is kind of preemptive to talking about bank statement lending, obviously, is where you as a client can attract borrowers. Okay, so a lot of people don't recognize or realize that there are 39, 40 business purpose states that even if you're not licensed in those states, you can still do investment financing in those states. We don't talk a lot about investment financing with bank statement lending nowadays because of the DSCR product that A&D Mortgage has. And I'm not going to get into that today, but I wanted you to recognize that the opportunities that you have within our company to expand your own personal business and marketing. Okay, so let's get into the nuts and bolts. When I was asked to do this presentation, I actually had the slide made because I think it's important that we understand as professionals, and I use that word a lot. My sales staff will get sick of it sometimes, because to be a professional in the mortgage banking industry, we need to take some responsibility for what for our participation in the transaction. And with bank statement analysis, I call it cash flow analysis, okay, of a self-employed borrower. There's really three things that you need to look at. You need to recognize the importance of understanding the borrower's income stream and what their average deposit is, and the anomalies that occur within those within those deposits. I'm going to get into some specific examples later on, but that the analysis of the income and understanding and interviewing your borrower for how their cash flow is created is very crucial to the beginning of this process. The second is the expenses that are represented on those bank statements, because if we see personal and business bank statements, I mean expenses on a personal bank account, and you're asking me for 100% of deposits, I'm not going to give it to you. And I say I mean the company, A&D Mortgage, isn't going to give it to you. You'll actually hear me interchange the use of the word I quite a bit, because I kind of take this personally when I'm looking at a loan. So, but A&D Mortgage is going to, if you come to me, because we'll use 100% of deposits on a personal bank statement. But if you've got commingled deposits in there, then we're going to question that, and we're probably going to hit you for an expense factor. So the third thing really is you properly identifying that whether this is truly a personal or business account, and analyzing the income to a cash flow percentage that's going to qualify your borrower at a debt ratio that works. I hope that makes sense. I know that was a lot of information. So let's see this slide. The most important thing on this slide to me is the very bottom. A&D Mortgage services its own loans, and what that allows us, and the flexibility is, in my previous conversation, if we're going to talk more about it in the actual underwriting of this of bank statement lending, but if you come to me and you ask me to take, I take 50% of the deposits on a business bank statement, but I don't have to take 50% of deposits. You can negotiate that with me based upon the type of borrower and the business that they have, that they represent, how they make their income, through an expense letter from a CPA. So that bottom statement, where that we service our own loans, which means that we securitize our own paper, which means they're our guidelines, is tremendous. Okay, let's get into the nuts and bolts. So I'll go to 580 score. We'll go to 90% LTV. We go to $4 million, cash out to $1 million, which is, again, can be increased by exception. We only require 3 months of reserves. And I know that if any of you are new to bank statement, to non-QM lending, you start comparing that 3 months reserve requirements to any of my competitors, and you're going to be very impressed. 12-month seasoning, 30-day lates are acceptable, but should be an asterisk there. We have two different programs. We have a prime program and we have a super prime program. The prime program allows you to have more challenged credit. The super prime program is more restrictive. The prime program lets you go to 12 months from a credit event, and with 60-day mortgage rates. So keep that in mind. Pricing is distinctly different. Okay, so are LTV limitations. I'm going to skip to the bottom. Actually, we will actually allow you to combine bank accounts, but more than that, we'll allow you to combine asset utilization. You can, if you've got to borrow with some money in the bank and you want to deplete that asset over time to create additional income for the purposes of, for debt ratio purposes, we can do that. Okay. Cryptocurrency is new to us, but keep one thing in mind: if you're going to use it as down payment or closing costs, it's got to be cashed out and into US dollars to utilize. Okay. Okay, let's see. The importance of this slide, because some of this becomes repetitive from what our opening conversation was. 100% of stable deposits is used for income. You, in your conversation with your client, are going to understand what is a stable deposit. I remember I had a client that was a hairdresser, and her average deposits per day were $250, $400, $300, $200. But every once in a while, once a week, she would throw in $1,000 deposit or a $1,500 deposit. She was doing weaves. But if the broker, if you had not interviewed, you, the MLO, had not interviewed the client, we would never have known that. And those weaves would have been discounted. So yeah, you really need to interview your client well for the purposes of 100% stable deposits for income. We'll use any bank statement, but the big thing is the bottom bullet that you have to put on your 1003 the maximum income that you're expecting to get out of the analysis, the cash flow analysis, because you can't add back. Our underwriting, if they don't agree with you, will subtract out, and then ask you to defend, but you can't add back. So make sure that 1003 has the accurate 12 to 24 month calculation of income that's supported by the cash flow analysis. So this is kind of repetitive. I said to you earlier that we would take 50% of business deposits. We take 100% of personal bank statement deposits, assuming it's not commingled money. We allow you to go to an expense factor less than 50% with a tax preparer. And again, you need to have the income accurate on the 1003. So let's talk about business ownership. If you own 100% of your business, it's one thing. If you don't own 100% of your business, it's different. If you don't own 100% of your business and you want to go on the transaction by yourself, you're only going to get your percentage of income equal to that of your percentage of ownership. I hope that makes sense. Your business has to be in place for 2 years. Now, that's an interesting thing, because if you're in the same line of work, but you change businesses, a lot of people come to us and they say, well, hey, I was a wage earner before, now I own my own business. That doesn't work unless I owned a I was an employee for a termite inspection company, and I now bought that franchise. So what you really want to start thinking about is, when you get into these complicated situations, again, it comes back to knowing your borrower and having a direct conversation with your sales executive, because the sales executives at A&D Mortgage are extremely knowledgeable in their product. Okay, so I want this slide is here for a variety of reasons. This is really a representation of the strength of A&D Mortgage and the character of the underwriting team and the ability for us to bend in the wind, so to speak. I can sometimes get esoteric, and I'll try not to. But so this loan wasn't my loan. It came from one of the sales executives in the Los Angeles office. And this borrower had a single deposit for $1.4 million. And they wanted us to do a bank statement loan for them and cash flow that over a 12-month period of time. And I don't know how many of you have done a lot of bank statement lending, but most companies would never have done this loan. In lieu of having a consistency of deposits, we got a executive summary from the borrower, and because of the sophistication of this borrower, he was a commercial developer. He knew what an executive summary was when I asked him for it, and he put together a very serious analysis of his business and his past clients, how he's always earned his income, the history of his company, his future clients that he has on the books for the next few years. And we amortized that one payment over 12 months, and we booked that deal. I actually checked on it just recently, and it's performing. So it was a great loan. Our underwriting team saw it as a great loan. Our secondary team securitized it and sold it, and our servicing department is servicing it, and it pays as agreed. So those are the kinds of things that if you start really, if you're looking for a company that is creative and solid, it's why I'm sitting in this chair, just to let you know. Okay, so Sam, this is kind of a recap slide. You don't have to listen to my voice very much longer. Sam, what are we going to do with Sam? Okay, what are we going to do with Sam? I actually think I know this actor, which is kind of funny. Neither here nor there. What are we, you and me, going to do with Sam as you being the MLO, the originator? You are going to interview him for what his self-employment business is. You are going to gather his 12 months bank statements. I would only get 3 to 6 at first if I was you, so that I could start to get a taste for what kind of a cash flow this person has. I would, and then in that, I would be able to have a stronger opinion as to what, after I look at the average deposits and any anomalies in those deposits, and I would interview him further for what those anomalies represent. And then I'd look at his expenses in his bank statements, just like we talked about before. And I would, at that point in time, as the originator, be the professional that can guide Sam into a bank statement program with either 12 or 24 months. And then you can represent it to the underwriting team and your sales through your sales executive with a really solid knowledge of what Sam's all about. And fortunately, we have a concierge department to help you with that cash flow analysis, because we require that when bank statements come in that they've been spread. All right. So if you aren't comfortable with spreading your own bank statements, you can send it to us and we'll do it. And the thing about that I always like to talk to on this website, this page, is our website. Our website is extremely informative. All right. If you don't write this or screen print this this link. You can go to our website. You go to resources, and right underneath the resources tab, it has the concierge tab. Click on it, and you can send your bank statements directly to us for analysis. We aren't going to take the first 3 or 6 months like I talked about. I don't want to confuse you. That's for you to utilize to determine who your client really is. We need to have either 12 or 24 once you've determined the borrower that you're representing. Okay. In recap, bank statement analysis, cash flow analysis is the next best thing to tax returns. When we analyze a bank statement, and we are going to know the cash flow of the borrower, and it's great for self-employed borrowers. It lets them eliminate the tax write-offs in their tax returns that inhibit them from qualifying. I mean, that's what this is all about, right? So it's perfect for self-employed borrowers. The income is simple to calculate once you understand your borrower, because you can pass it to us to spread it for you. Okay. And then obviously the higher the credit score, the better the rates. There's no ad for our bank statement loans. We don't have an ad on for rate on our bank statement loans. So because we recognize that you're basically giving us a full analysis of the borrower's ability to repay, which we all know about ability to repay.
All right. Thanks, David. Well, before we get to the questions, I'll jump in and just recap a couple other things for our partners who either work with us currently or are curious about working with us, about some tools that we could have that we can help them. So as David mentioned, we have the concierge service available through our website. And you will be getting that link to that in a follow-up email that comes out automatically tomorrow. So you won't necessarily need to copy it down, but if you did, great. We do have a quick pricer available on admortgage.com that does allow you to price out various non-QM programs that we offer, including the bank statements. For those of you who are working with us, we have a centralized appraisal center called A&D Appraisal Center, where you can work with, I believe it's over 24 approved AMCs at this point. And you can order 24 appraisals if you want and manage the full pipeline of all of those through the centralized platform. And then one of the other platforms available to the approved partners is A&D Studio, which is it functions similar to Canva if any of you have used that. But we have all of our product flyers that are very customizable for third-party originators. So we make that available to our approved partners. The start process is very simple. Just sign up and we'll issue you some credentials and you'll go through some trainings. Speaking of trainings, we do the weekly webinars every Tuesday at 1, and we've got 4 more of them lined up for the next few weeks that will cover the profit and loss statements, the bridge loans, and then 1099 WVOE loans. And then we're going to do a very specific targeted one about non-mortgable condos, because not every lender does work with those. For those of you who are on social media, we do have presences on Facebook, LinkedIn, YouTube. And then we have a channel on something called Telegram. It's a app similar to WhatsApp. It's fairly new to the US market, but you can download it through either Google Play or the App Store. And then there are 2 other exchange groups or non-QM forum groups, that one is on Facebook and one is on LinkedIn. And those are available here as well. Last thing, and this is a question we always get, which is, are these webinars recorded or can you get access to the presentation? And the answer is yes. So we record these. They will be up either by the end of the business day today or probably first thing in the morning. And we have all of our previous, current, and future webinars all housed under admortgage.com/learning center. Again, for those of you who registered in advance, you'll get an email tomorrow that'll have the link to the recording as well. So you won't have to take too many notes. And then as you guys log out, there'll be a brief 5-6 question survey. It takes about 2 minutes. Just let us know how we did in terms of the content, how we found out about us. And with that, we'll jump over into the formal questions. David, you've got visibility. Can you read these, or do you want me to read them off to you?
I do have visibility.
Okay.
So Carrie Collins, I don't know if you want me to, so what happens if someone switches from Schedule C to 1120s versus using your personal bank account while a Schedule C? So I am not going to know that if you give me bank statements, I'm not going to know that you've got a borrower that has a corporation versus a sole proprietorship. I'm gonna base that on what you put on your 1003. So if I actually would understand, A&D Mortgage would understand if you're going from a Schedule C to an 1120, because that's a natural progression of a successful business. So I don't, in the bank statement cash flow analysis, the only place I might see it is if the bank statement itself changed in the name on the bank statement. And if that's the case, then you have to actually close the DBA and open a new one and show the closing transfer to the new one. That's going to tell me and legitimize the change of companies. Okay, I hope that answers your question. Does the concierge desk flag SBA loans, loan deposits, and exclude them in the calculation? So borrowed funds are not considered income. You might be heading towards those PPP loans that went out for COVID, and they were considered for income, but you would have to document it. But if it's just somebody that went out and got an SBA loan for material purchase or business expansion, no, we would not consider that, and it would be subtracted out. Why is it better to use 3 to 6 months business bank statements with Sam's scenario? So my comment about the 3 to 6 months is for the convenience of your borrower. When I was in retail for a very short stint, I respect you folks for what you do, because I'm not good at what you do. But one of the things that I recognized is that borrower convenience of paper is appreciated. So when I said I'm going to ask Sam for 3 to 6 months bank statements, I just want to have an overview. I want to see from 3 to 6 months as a wholesale executive. If you come to me as an originator, I sometimes will ask you, just send me 3 months bank statements. Let me look at them, because that's what I do. So I do the same thing with a borrower. If for the convenience of the borrower, yeah, maybe you might have a completely different philosophy. You might say, hey, I want to give my borrower one list, one time. This is everything I need. Good for you. It's just not how I do business. All right. So that was the justification for that 3 to 6 months. I want to just have a quick glance so I can see what the income anomalies are and what the expenses are on that bank statement. How are Airbnb income viewed, and will it be considered self-employed? Yes. Airbnb is a deposit that we consider. You put on your 1003 that the person's a real estate investor, and we're done. I just wanted to share that I recently closed a 24-month bank statement loan with A&D Mortgage, and the experience was awesome. Hey, Mindy, you're fantastic. Thank you so much. I see that you allow for only 2 different bank accounts. Is that per business or per borrower? Or what if borrower has more than one business? Okay, so we allow you to bring in 2 different business bank accounts. So if a borrower owns 4 or 5 businesses, we're not going to let you bring in 4 or 5 bank accounts. You're going to have to find the 2 strongest and utilize them to make it work. So I guess that's kind of a bottom line answer. My question, can you use 6 months of personal bank statements while Schedule C and then 6 more for business bank statement when the client switched from Schedule C to LLC 2011 20? Okay, so yes, if you closed out the DBA account, the Schedule C account, and you transferred any balance in that to the 1120 account, we will recognize that they moved their business and improved it. So yes, we can do that. I hope that answers your question. Can bank statements and crypto be both used as income, or only? Can bank statements and crypto? So I think what you're asking me is, because crypto is not an income source unless you deflate it, unless you deflate it. And what I mean by deflate, I mean you have to transfer that's actually a really good question, and that's a secondary marketing question that I haven't been asked before. Can I use cryptocurrency for asset depreciation? I'm going to say no, but I would ask first, because I think you would have to transfer that to a currency before you can deflate it. I don't know if that's really the question you're asking, but you can mix asset depletion with bank statements. So if you're asking me to deplete a crypto account, I think you'd have to transfer it to dollars first. But that's a question I would have to go to my secondary on.
And we could follow up with him afterwards if we want to ask the secondary team, and we can send him an email.
Yes.
Okay.
Anything else?
Yeah, there's one question that Michael Miller's got his hand up, so let me unmute him really quick. He might not be able to type his answer in. Michael, I see you've got your hand raised and you've got a question. You want to go ahead and unmute yourself and ask it?
Hey, you know what? I'm sorry, I clicked the wrong button on there. My bad.
Oh, okay. All right. Just want to make sure we got you covered. All right. Right. Okay. So if we've got any more questions, let's field them now. And we'll get back to Joshua's question about the cryptocurrency and email him an answer for that. Let's give it a lot of good questions, though.
I enjoyed it.
All right. Let's give it 30 more seconds. Just takes people a little bit of time to type a lengthy question. All right, there's one. Oh, here's one from Ada. Do you see that one? Borrowers.
Airbnb is home. Is that okay? My borrower is Airbnb his home. Oh, an owner occupied Airbnb. No. I hate to be blunt. Unless you've got an ADU, you cannot Airbnb your bedroom in your primary residence. But if you've got an ADU on your same property, you could Airbnb that.
Okay, great. So the person does have an ADU. Oh, what's ADU?
I'm sorry. It's a Fannie Mae term for it's an additional unit on your house, on your property. You could call it some people might want to call it like a detached. It's a detached unit, so it's just a guest house. That's the word I'm looking for.
Okay.
You
like renting out your garage.
Yeah, that's kind of a stinky tennis shoe.
Would the garage have to be detached from the house?
Well, it doesn't, but the plumbing becomes an issue because if you've got, usually an ADU has separate plumbing, and if you've taken a garage and converted it, unless you did it with permits, and you put, because you probably put, if you put in a kitchen or a bathroom, that becomes problematic. Zoning, I don't know what state you're in, but in California, I think with the new propositions that they have, I think the garage conversions are considered ADUs if they're done with permit and they meet certain criterion. If you're not in California, I don't know all those answers.
Exchange. Okay, so I think one more. Thanks. Mindy, typically we only send out the recordings, but we can send you the questions for sure. And then the presentation deck, yes, we can send that to you as well. So, all right. All right, I think that's the last of the questions. Give it just another 30 seconds. We'll wrap up here if that is the last batch of questions. We'll give 30 more seconds to get any last minute ones in. Other than that, we will call it a day. Remind you guys, if you don't mind, to take that quick survey. And no additional questions. And again, the recording will be available tomorrow at the latest at admortgage.com/learning-center. So thank you everybody for your time today. Hopefully, if you found this interesting, you'll join us again next week and in the other upcoming weeks for the other webinars that we've got scheduled. So have a great rest of your day, everyone. Thank you, David.
Thank you.